In our next segment, we'll explore another common psychological pitfall, confirmation bias, and how it can lead you down a rabbit hole of bad investment choices. Imagine an investor who's convinced that technology is the future. This isn't inherently a bad belief. Of course, technology is transforming so many aspects of our lives. But this investor primarily consumes news and analysis that supports this belief, while dismissing anything negative about the tech sector. They're essentially building an echo chamber around their investment thesis. This, friends, is a classic example of confirmation bias in action. Sam, as our expert today, can you shed some light on how investors can first identify and then mitigate this confirmation bias in their own research and decision-making process?
Absolutely, Alex. Identifying confirmation bias starts with self-awareness. Ask yourself, am I actively seeking out information that challenges my investment thesis? Or am I just reading headlines that reinforce what I already believe? A good starting point is to diversify your information sources. Don't just stick to one website or financial guru. Explore different viewpoints, even those that contradict your own. Then actively engage with those differing perspectives. Don't just dismiss them. Try to understand the reasoning behind them.
So, if I understand correctly, even if I believe in a particular sector like tech, I should actively search for articles and reports that highlight potential downsides or risks. That feels almost counterintuitive. Wouldn't it create more confusion?
It might initially, Taylor, but think of it as stress testing your investment thesis. You're essentially trying to poke holes in your own logic, preemptively addressing potential weaknesses. This reminds me of the reference article we've been discussing, where they mention biases affecting portfolio decisions. Confirmation bias specifically leads us to seek out information confirming existing beliefs rather than objectively evaluating all available data.
Exactly, Sam. This concept of stress testing is powerful. It's like building a bridge. You wouldn't just test it for the expected weight. You'd also test its resilience against extreme weather, heavy loads, even earthquakes. Similarly, you want your investment strategy to hold up even under challenging market conditions.
This connects to what we discussed earlier about diversification, right? If I'm only invested in tech and the sector experiences a downturn, my entire portfolio is vulnerable. But if I'm spread across different sectors, the impact is mitigated.
Precisely. Diversification acts as a buffer against confirmation bias, forcing you to consider other sectors and investment opportunities you might have otherwise ignored.
Let's use a simple example. Suppose you're convinced company X is the next big thing in AI. You're constantly reading articles about their groundbreaking technology and future prospects. But what if you also dedicate some time to understanding the competitive landscape, potential regulatory hurdles, or even ethical concerns surrounding AI? This broader perspective helps you make a more informed decision.
Now, to the second part of my initial question, Sam, what are the real dangers of relying solely on information that confirms our existing beliefs?
The danger is you become blind to potential risks and overestimate potential rewards. This can lead to concentrated portfolios and significant losses if your core belief turns out to be wrong. Imagine our tech-focused investor during the dot-com bubble. They may have ignored all the warning signs because they were so convinced that tech is the future. This mindset can be incredibly dangerous.
So to summarize, overcoming confirmation bias is about actively seeking out diverse perspectives and stress testing our investment theses. We need to be aware of the danger of living in an echo chamber where we only hear what we want to hear.
Absolutely. And this applies to all investments, not just tech stocks. The key takeaway here is to be a critical thinker, challenge your assumptions, and always seek a balanced perspective.